The way musicians say they broke these days is very alarming.
I had to wake up one day in the league and find out everybody from my financial advisor, from my mom, to everybody in my family was stealing from me down.
$600 million you made. What happened?
That's so much money.
Mike, that's a lot of money, Mike.
And a lot of fun.
This picture is the most unlikely combination of people. You have business moguls, entertainers, and athletes. Now, what exactly do they have in common? And why are they now used as an example of what not to do when you become rich? I am Chidi, and this is Money Made Simple. By hard work, business acumen, inheritance, lottery, or celebrity, these people all amassed some form of wealth and then pissed it all away. So we have to appreciate their good luck and grit to make money in the first place. It is important to understand that it is one thing to make money, it is another thing entirely to keep it. Financial advice is littered with aphorisms about that. Warren Buffett has a saying that goes, rule number 1, never lose money. Rule number 2, don't forget rule number 1. You'd also hear things like it's not about how much you make, but how much you keep. Getting money requires taking risks. Keeping it requires humility and fear that what you've made can be taken away just as fast. So we get it. Keeping money is as important, if not more even, than making money. So how do we do that if the mentality behind sustaining wealth is different from the one that helps generate it? Well, let's get into that. By the way, this is Money Made Simple, and our goal is to open up and present to you the world of wealth, finance, and principles to help you grow in fun, engaging ways and build a community where that knowledge is easily accessible. So if you like the content, give it a like so the algorithm knows you liked it. Subscribe to our channel and turn on notifications to know when we drop a new video. So what's this mindset thing about keeping wealth, and why is it that people seem to miss that? Morgan Housel puts it this way: doing well with money has less to do with how smart you are and a lot to do with how you behave. And what are these behaviors? They include ego, anxiety, and previously learned experiences. Walk with me here. So you've made your millions, and congratulations to you. Well done. Ego says one of two things to you. It says you can finally show off to the people who told you that you would never make it. They have to know that you have it like that, like that. Morgan Housel also says saving is the gap between your ego and your income. And sometimes this lifestyle creep can be almost innocent. A better car that doesn't break down all the time, a bigger apartment, newer clothes, because now you need to be out there. And you've moved from spending on necessities to frivolities to signal status. Meanwhile, your newly acquired wealth is slowly diminishing and you don't even realize that. The second thing ego tells you is that you should take even more risks and get bigger as soon as possible. After all, if you already made it once, you can climb the ladder again and be even more successful this time around. So you take bigger risks. Anxiety and fear exist on the other side of overblown ego. When you're worried at every turn that you will lose your money and want to protect it, you're likely to make decisions born out of emotion than cold, rational logic. Daniel Kahneman's research shows that we feel the pain of losing money twice as much as the pleasure from making it. So people who are worried about losing their wealth are acting out human nature. So how does this fear manifest itself in irrational ways? Well, most people start doing the opposite of the things that we explained ego makes you do in the last section. Panic selling of stocks, shares, or crypto holdings at the slightest market dip, waiting for the perfect investment opportunity till it's too late. Crippling anxiety over losing wealth can lead equally to poor decisions. Finally, personal experience shapes our relationship with money. If you grew up with scarcity, you might save excessively. If you've seen easy money, you might chase risky plays or be given to wanton misuse of money. People do crazy things with money, and the way Morgan Housel puts it, it's because they are emotionally invested in a story. Their story, where they will either not make the mistakes of people before them or repeat the same bad habits and poor decision because it'll be different for them. So what works then? One, spend less than you make. And that includes abandoning ideas like spending money you don't currently have based on anticipation of future inflows. Don't be these guys. 2. Build a margin of safety. When it comes to risky business investments or chasing the next wave on the stock market or elsewhere, create a hard limit which you cannot exceed, and that way you mitigate your appetite for risk. 3. Save. Even when it feels like you don't have to because things are going so well. 4. Be comfortable with missing out. You are not supposed to catch all the waves. That's what I've been trying to tell you guys. And this just brings me to my next point, which is stay calm. Most people lose their wealth and their head at every dip and rise of the market. A JP Morgan-led research showed that most investors underperform the market because they exit too early and re-enter too late. Housel points out you can be wrong half the time and still make a fortune if the other half includes big wins and you just stay in the game. And Vanguard buttresses this fact here too, as they show that long-term savers with average returns often outperform active traders, not because they are smarter, but because they are more consistent. The best financial advantage? Emotional control. Additionally, another thing you can do is seek help with managing wealth once you acquire it. Banks like Credit Suisse offer wealth management services to high net worth individuals. BlackRock and Vanguard help people hold on to and grow their wealth. Similar to the partners for today's video, Kudi Financials. Kudi provides fund and asset management for both institutional investors and high net worth individuals with investment products ranging from the Kudi Eurobond Fund, the Kudi Alpha Fund, and the Kudi Hedge Fund. Find out more about them via the links in the description. That's it for today's video, guys. Tell us what was that one purchase that you didn't need but still made anyway when you made your biggest earning ever. See you in the comments.